Happy Friday, everyone.
Right.
Yeah. Curious, what is your opinion of this class on Fridays? Are you just like really, really excited and just like that enthusiasm levels through the roof? Or are you just like get it over and done with Barnes? I got weekend plans, or is it a little bit of both? A little bit of both. Okay. All right. All right. So I'll try to stand too much in your way, but we got important auditing stuff to talk about today. Just as a reminder, if you attended the Career Internship Expo yesterday, please let me know so I can give you credit for extra credit. Send me an email, and I will get you on there. Reminder, we do have a lunch coming up on the 6th with our Spire Energy representatives who will be presenting to our class later that day. If you're interested in attending the lunch, please let me know. Still have some seats available. Okay, yeah. I think that's it for now. I may have some more stuff next week, but we'll get to that when we get to that. We got homework to do. Homework to talk about. Everybody just found this homework riveting, just like exciting. What the highlight of your day? That's what I like to hear. That's what even if it's in jest, that's what I like to hear. An auditor's primary consideration regarding an entity's internal controls is whether they what? So before we answer this question, let's go ahead and take a look back. It's something that I shared with you over the past 2 class sessions, something you know and love and you really appreciate. This right here. Does everybody remember this? Is everybody sick of this already? Don't get sick of this. This is really important. It says, no, excitement. Friday, Dr. Barnes. Yes. All right. So make sure that we understand what the risks and the control are. That's the basic level. That's what we learned in AIS. Here in this class, we also need to characterize our risk according to management assertions. All right, our client's controls should address the appropriate assertions, which means they're addressing the appropriate risk, and that we're going to test those controls to make sure all that lines up. So that helps in answering this question. Let's go ahead and go back to it. So what is a primary consideration? So the controls prevent management override? No, controls can't prevent management override. They relate to the control environment. That's something that I think is probably a very big concern. But again, we're talking about a primary concern. This is like a most likely question. We're looking for our best answer, not just what's possibly a correct answer. They reflect management philosophy and operating style. That's basically the same thing as B. All right, management philosophy and operating style is how we can characterize control environments. So let's look at D. Affect the financial statement assertions. Is that something that we learned from our control sequence? Yes, that's exactly what the control sequence is talking about. It's saying, look, if you're going to have controls, then they need to address the appropriate risk, which we characterize via management assertion. So D is our answer. 613, which of the following statement about internal control is correct? By the way, I hate questions like this. Whenever I approach a multiple choice question, I want to at least have some idea of what it is that I'm looking for in the question, and just kind of like saying, which of the statements is correct? That's like going to a buffet and none of the food is good. That's just the way it is. Yeah. Everything's going to be about food, doesn't it? Yeah. A properly maintained control system reasonably assures that collusion among employees cannot occur. Is that a correct statement? No, collusion is again one of those inherent limitations of internal control. Establish and maintenance of internal control is an important responsibility of the internal auditor. Is that the internal auditor's responsibility? Whose responsibility is it? Management, yes. Internal auditor can help out that. They can actually help, as we're going to find out, they can help with the testing and establishment, or the maintenance of internal controls, but I shouldn't say maintenance, the testing and assurance related to internal controls, but the design, implementation, and maintenance, that's management, all management's responsibility. An exceptionally strong internal control system is enough for the auditor to eliminate substantive procedures on a significant account balance. So let's think about this. We test controls. The controls are phenomenal, best controls you've ever seen. Can we just say, wow, there is so little a chance of any misstatement that we're just going to go ahead and just write off any further testing, no more substantive testing in this area? That'd be great. That'd be great, wouldn't it? Is that possible, though? There's one primary issue that kind of stops that, is that we know the controls can actually be very effective at conducting or at making sure that transactions and events are correctly and they take place. But we also know that there's action that can take place outside of the normal course of transactions and events, such as manual journal entries at the end of the period, that are going to affect the account balances and the financial statements. Remember, we talked about the 2 categories of assertions: transactions and events and account balances. Substantive procedures are trying to guarantee that those account balances are correct, which transactions and events, while testing those can give us some assurance in that area, do not give us whole assurance in that area. So we want to still make sure we perform some substantive testing, regardless of how good controls are. So then we have D, the cost-benefit relationship is a primary criterion that should be considered in designing an internal control system. So is this talking specifically about auditing, or is this talking about financial statements or financial accounting? This is financial accounting. So it's like saying, why did you throw this question in here, Dr. Barnes? I refuse to do financial accounting and auditing. You've got to know financial accounting if you're going to know auditing. So what was that SFAC 8 we learned about in AIS? That was basically the framework, the fundamental qualities of accounting information. And remember, we talked about at the very beginning of AIS, we said the cost of the information cannot exceed the benefit of providing that information. Is that going to be true for controls? Like if you had a $1 million control that prevented a $1,000 misstatement, would that be worth it? Probably not. Probably not. So it's still going to be D. It's still going to be D. Something we learned. Monitoring is a major component of the COSO internal control integrated framework. Which of the following is not correct in how a company can implement the monitoring component? I actually like questions like this, even though you'll still have to read through the answers, and questions that don't necessarily say, what is monitoring? You do need to know what monitoring is, but we're going to apply monitoring. Can monitoring be an ongoing process? Yes, it can, and it probably should be an ongoing process. Can it be conducted as a separate evaluation? Yes, I think ongoing process is stronger, but a separate evaluation is possible. Monitoring and other audit work conducted by internal audit staff can reduce external audit costs. What do you guys think about that? That sounds great. I would love that. That's something that we definitely want to happen. An independent auditor can serve as a part of the entity's control environment and continuous monitoring. There's a problem with that. There's a problem with that. If we're serving as part of the internal control function, whose work are we auditing? We're auditing our own work. Is that violate independence? Yep, you certainly bet. It's like it's grading your own exams, grading your own exams. Like I got another 60 out of 60. Dr. Barnes is going to be so proud of me. Dr. Barnes is going to be saying fraud. Fraud. Yeah. Except for those of you who scored a full 60 out of 60. All right. 617, regardless of the assessed level of control risk, an auditor would perform some, oh, we just talked about this. What do we say that we're going to perform some procedures, some types of procedures of regardless? Was it test of controls? No, we can avoid test of controls in many situations. That's the substantive strategy. Analytical procedures to verify the design of internal controls. So first of all, are we required to perform substantive analytical procedures? We are not required to perform substantive analytical procedures. Remember, there are 3 types of analytical procedures. There are preliminary analytical procedures, substantive analytical procedures, final analytical procedures. Only 2 of those required, and that's the first one and the last one. So we're not required to perform substantive analytical procedures. Besides, can we use substantive analytical procedures as a test of controls? This is saying we're going to verify the design of controls through analytical procedures. How are you going to do that? I'm going to do a trend analysis of the way that the control was designed. That doesn't work. That doesn't work. Analytical procedures cannot be test of controls. So B is out. Perform some substantive procedures to restrict detection risk for significant transaction classes. What do y'all think about that one? That sure sounds correct to me. We do need to perform substantive procedures, and the whole point is to make sure that we had properly addressed detection risk. That was one thing we learned back in chapter 4. What about dual purpose tests to evaluate both risk of monitoring misstatement and preliminary control risk? We're not required to perform dual purpose tests. They can be convenient when used, but we're not going to talk a lot about that. Remember, dual purpose tests are basically when we perform test of controls and substantive procedures simultaneously. They're not going to be the same tests, but we can perform the test in the kind of the same process. We're not required to do that though. 618, assessing control risk below high, which basically means that we are going to follow a reliance strategy, involves all the following except what? So which of the following is not appropriate here? So identifying specific controls to rely on. What do y'all think? Should that be something we do as part of a part of a reliance strategy? Yeah, well, if we're going to test controls, we probably better know which controls are we relying for assurance. That's the whole point of this process of this reliance strategy, identifying the controls and then saying these controls will provide us assurance if they're working. So those are the ones we're going to test. Concluding the controls are ineffective. If controls are ineffective, are we going to use a reliance strategy? If we think, okay, these controls definitely don't work, let's test them to find out. Does that sound like a good idea? Now, if we think controls are ineffective, we're probably going with a substantive strategy. So B is our answer, but let's go through the rest. Performing test of controls. Does a reliance strategy require test of controls? Yes, it does. Okay, analyzing the achieved level of control risk after performing test of controls. So we have 2 types of control risk. We have our assessed control risk, which occurs before we do any testing. And then after we perform our testing, we reassess so we can come up with achieve control risk, which is what's being described here as D. So A, C, and D are all correct. B is not correct. 619, which of the following audit techniques would most likely provide an auditor with the least assurance about the effectiveness of operation control? Talk about a badly worded question. Most likely, least assurance. So this is terrible. So basically, we're talking about which of these types of procedures is going to give us the least reliability. That's how you should read this question. Now, you're probably saying, Dr. Barnes, this is confusing. There's two possible answers. And the answer, you're absolutely correct. If I asked this question on the exam, I would expect that any one of two possible answers would be correct. Although, wouldn't that be mean if I said, hey, you're independent thinkers, you should circle both of these, okay? You miss it if you don't circle both. No, I wouldn't do that to you because the assumption is one are correct. So we already know in our reliability spectrum, the lowest reliability is oral evidence, which is observation and inquiry. Both of these are listed here. Now, the book likes to say that inquiry of personnel is the least likely because it's less likely that people are going to change their routine than they're going to lie. But again, that's splitting hairs. So I think either A or C is both perfectly reasonable. What about reperformance and walkthrough? What's the reliability level of those two types of tests? Sky high, very, very high, because the auditor's performing those tests, okay? So observation inquiry low, reliability high, badly worded question, but still valuable discussion to have. SOC 1 type 2 reports issued by the service organization's auditors typically do what? So let's just go ahead and make sure we understand the distinction, okay? SOC 1 reports, first of all, SOC 1 deals with controls in place in a service organization that relates to what did we talk about? They relate to what? Internal controls related to, what are the two words? Financial reporting, internal controls over financial reporting, okay? So SOC 1 reports relate to internal controls in place from a service organization that cover internal controls over financial reporting. So what does a SOC 1 type 1 report look at? It looks at the design of controls at a point in time, okay? If we were to say this is going to be more or less reliable than a SOC 2, which would you say? Less reliable. Why? A SOC 1 type 2 report covers the design and operating effectiveness of internal controls, both the design and operating effectiveness of internal controls over a period of time that are in place at a service organization. Okay, so defining that, now that we know about SOC 1 type 2, what are we going to say? All right, SOC 1 type 2, provide reasonable assurance that their financial statements are free from material misstatement. SOC 1 reports, are they about financial statements? What are they about? What does that C in SOC stand for? Controls, okay, we're dealing with controls. Ensure the entity will not have any misstatements in areas relative to the service organization's activities. No, we're not dealing with misstatements here. We're talking about the effectiveness of controls, whether the controls are operating effectively. Ensure the entities are billed correctly. Now, come on. That was lazy writing right there. That's lazy writing. Assess whether the service organization's controls are suitably designed and operating effectively. That is correct. Those are both correct statements with respect to a SOC 1 type 2 report. If this was changed to SOC 1 type 1, would this change this being a correct answer? Yes, because remember, SOC 1 type 1 only assess controls, design of controls. They don't assess operating effectiveness, which if we had that in this particular situation, it'd be like, Dr. Barnes, there are no correct answers. And I say, yes, you just said something very profound about life. Yeah. But yeah, so D in this particular situation, that's the answer for that, what I was looking for. All right, moving on to some questions, some more complex questions. Let's talk about 630. Cook CPA has been engaged to audit the financial statements of General Department Stores, a continuing auditing entity, which is a chain of medium-sized retail stores. General's fiscal year will end on June 30th, 2024, and General's management has asked Cook to issue the auditor's report by August 1st, 2024. So that's like a month turnaround. Is that a short time frame for an audit? You betcha. So think about this. Could we complete an audit in a month? Yes, that's reasonable. But what do we need for a financial statement audit? What is one of the most important things we need? We need the information that's going in the financial statements. Usually that's represented by the entity's unadjusted trial balance. So is it likely that they're going to have that unadjusted trial balance right at June 30th, 2024? If you've ever done any work in auditing, the answer is no. Sometimes you're just kind of like 2 weeks in saying, where's that trial balance? Oh, we'll have it for you tomorrow. Then 3 days later, where's that trial balance? Oh, did I not give that to you? I'll have that for you tomorrow. And that keeps going on and on and on. Clients are very, very bad about getting things to us in a timely manner. So assuming that it takes even just a week for them to get that trial balance to us, to get all those entries booked, those adjusting entries booked and everything reconciled. So we get to that point, and then we've got 3 weeks to complete the audit, which is a very short period of time. So what do we need? they're not going to have sufficient time to perform all the necessary field work in July, but they can perform most of the field work at an interim date as of April 30th, 2024. All right. So after the accounts are just an interim date, Cook will also perform substantive procedures covering the transactions for the final 2 months of the year. This will be necessary to extend Cook's conclusions for the balance sheet date. Now, there's some interesting questions here. Is this a practical approach to this particular dilemma, doing some interim testing? I think this is a very practical approach. This is a very practical solution. They will not have a chance to finish all these procedures in a 3-week window. I know it says 4 week, but we're going to assume that the client is not going to have the financial statements immediately ready for us. So we're going to be cramped on time in that last month, in that month of July. So it's going to be very difficult. So let's get as much testing done in advance as we can. What did we talk about when we talked about that? So this is going to be part A. Describe the factors Cook should consider before applying substantive procedures to the general balance sheet account at April 30th, 2024. So let's talk about what we should do before that. What would be the most likely area that we want to apply interim testing to? So what usually occurs before substantive testing? Right before substantive testing. It's the entire focus of this chapter. Test of controls, okay? Test of controls. So we would want to be looking at controls and saying, which controls can we test right now and come up with a conclusion as to the operating effectiveness of controls? That gives us a identification of what control risk is. That allows us to determine what detection risk should be, and that gives us an idea of what we need to do for substantive testing. Now, does that mean we're going to test every single control during interim? Not necessarily, okay? Not necessarily. Some controls we may have to wait until year end, particularly if they're controls that are variable or they have to relate to financial reporting at the end of the period. But for the most part, we're going to try to get as much of that interim testing of internal controls as test of controls we can. So then we're going to look at the test of controls and come up with what we believe our conclusion is, our detection risk. That's going to give us some insight of what we need to do for substantive testing. Now, can we perform some substantive testing before year end? Can we do some interim substantive testing? Is that a possibility? That's madness, Dr. Barnes. You're talking like a crazy person. It's true. I am talking like a crazy person. But that's a relatively everyday experience. Okay. But about this specifically, can we actually do substantive testing at interim date? Yes, we can. Okay. We can do some substantive testing. It cannot be solely substantive testing at interim date. Remember, we talked about the situation where I gave you 2 different exam options, one at year end or one at the semester end, and then one during the middle of the semester. What if I just give you all the testing during the middle of the semester? Well, there's one of 2 options. Either you're not prepared to answer the questions that we haven't studied yet, or I only test you on what we studied and we cover everything else that we cover is just left unchecked. So we do need to make sure that whatever we do not test effectively during the interim period, we do some follow-up testing during year end. So think about this. Let's say that I do transactions testing for the 10-month period before. What am I going to want to do at year end? I'm going to do testing for that additional 2-month period to make sure I have coverage of the entire year. That would be an example of that. So this kind of answers part B. For accounts tested as April 30th, 2024, describe how Cook should design the substantive procedures covering the balances of June 30th, 2024, and the transactions for the final 2 months of the year. The answer is, and as we're going to talk a lot about this as we start getting into the business processes, is that a lot of this testing is going to be based on account balances and individual transaction balance or transaction amounts to determine whether the balances are correct and accurate. If they're not reported accurately, we're going to focus very heavily on making sure that we have coverage of an entire period, an entire year, to get that assurance. So testing just 10 months is not sufficient. Testing just 2 months is not sufficient. We have to test 12 months in total. The good news is if we test 10 months early, that gets most of our work done in advance, and then we can rely on testing the final 2 months during year end. So if for kind of an analogy, think about it this way. Think about that you've got an exam, and the exam could either be comprehensive or cover the most recent 3 weeks of material. Which exam would you rather study for? I'm not afraid of a challenge, Dr. Barnes. Give me the comprehensive exam. All right, no. If anybody is ever dare say that, I'm going to be put to a spot. So I'll be like, I kind of have to do it now. Yeah, we want to cover 3 weeks. Okay, one of the most recent material because that's the easiest to test. Less volume, more recent. All right, the same holds true in audit. All right. Now let's talk about all the Queen's horses, On February 14th, 2013, former City Comptroller and Treasurer of Dixon, Illinois, Rita Crundwell was sentenced to 19.5 years in prison for diverting $53 million. By the way, she was let out early, and she's now living on her, I think her brother's farm. And so there's actually some very interesting footage that you can find out there of a journalist trying to go muckrake and get interviews with her, and her brother just stopping him at the gate and saying very rude things to them. So, yeah. So, the fraud began in 1990 at a relatively small amount, but the level of embezzlement increased significantly in last year's embezzlement. In 2008 alone, she embezzled $5.8 million. So, yeah. She basically had a horse breeding business and a lavish lifestyle. She purchased $400 or 400 horse farms, 400 horses farms, and a $2 million RV and jewelry. Her position as city treasurer paid about $80,000 a year at the time of her arrest. So this should be one thing that any kind of auditor will look at. It's interesting. She's a horse breeder, and I happen to know for a fact that raising horses, it's not a profitable business. You have to be pretty wealthy. Where she gets all that money? Oh my gosh, they have to take out another loan. This company, this city cannot seem to maintain an adequate balance sheet. That's actually an interesting story. Is that they were taking out debt loans quite frequently, especially in the later years of her fraud, which is probably pretty reasonable given that she was stealing like $5.8 million in 2008. Yeah. Yeah. So, yeah, that background. So she was one of the most trusted people in Dixon, Illinois city government. She started working for the finance department. She was still in high school in 1970. In 83, she was appointed as the comptroller treasurer. As comptroller, she handled all of the finances for the city of Dixon. Okay. Does that make anybody else cringe when they read that? All the finances. What was that translate to? She had no segregation responsibilities. Dixon had no segregation of duties. All right. Certainly problematic. Quanrell participated in budget meetings for the city with other city council members and voiced a need for Dixon to make spending cuts due to a lack of sufficient funds. It's like basically what she was saying, if you read into the lines, is okay, I'm taking all this money for my horse ranch, so you guys are going to have to cut your operations because I need the money for my horses. Yeah, that's how we interpret that. Many of the city council officials who held elected positions were not full-time employees of the city. So just for context, Dixon, Illinois is roughly the same size as Kirksville, Missouri. So think about the city infrastructure. If you know anything about the city infrastructure at Kirksville, Missouri, like does anybody? I don't know if he's still mayor, but I think he's still mayor. Who the mayor of Kirksville is currently? Zach Burton. So is that still mayor? Is he full-time mayor? No, where does he work? He works here at Truman State, actually. Yeah. Zach Burton's not a full-time mayor. That's kind of the situations. City council people are also, that's not their full-time responsibility. They do that as kind of a side gig. They're compensated, but not very heavily for that job. So yeah, that's kind of a similar situation there. Now, the process by which Crandall was operated to obtain the funds was not extremely complicated. According to the indictment, she opened a bank account at Fifth Third Bank, the name of Dixon RCDA. That account appeared to be for the benefit of Dixon, but Crunwell was the only signatory and the only person who wrote checks for that account. Dun, dun, dun. Crunwell was able to deposit city funds into other sources in a legitimate capital development fund. After she created false invoices, Crundle would write checks on a legitimate fund payable to treasurer. She then deposited these checks directly in the RCDA account. Then assumed the bank actually assumed the money was for the city. Crundle reported transferred city funds into the account and used the money to pay for her own personal and private business expenses. Boy, that's just so sometimes you hear a fraud scheme and you're just kind of like, well done. That was just impressive. This is one of those ones I'm just kind of like, what's going on? Was everybody just sticking their head in the sand or putting their fingers in there and say, I don't want to hear about it? This is just this is basic. Okay. For a generational term that I should not be using, this is basic. All right. In October 2011, where Kundra was away from work, another individual employee employed by the city of Dixon requested Fifth Third Bank to forward all the city's bank statements, realized that this account appeared to be inappropriate, and identified the mayor or informed the mayor of the account. Then determined that the account did not relate to any legitimate business city, and then notified the FBI. Now, interesting story is the FBI found out about this, and they had to still conduct 6 months of investigations afterwards. They had to continue on, and basically the employees just said, "Don't act like anything's wrong. Okay, we need to find proof of this." So the employees were still trying to be chummy with Rita Crunwell, and they're like, "You've been stealing millions of dollars from the city. I hate you so much." Yeah. So yeah. Now it's set a lawsuit against the auditors and the bank for 40 million. Okay. During the time of the fraud, the financial statements were audited by CLA, Clifton Arson Allen. By the way, one semester I had a student who had just accepted a job offer from CLA, and I had to go through this case. And I said, it's okay. All of the accounting firms have done something bad. So firm agreed to pay 35.15 million. The Fifth Third Bank had 3.85 million. CLA conceded its shared responsibility for the fact that fraud was not detected. Also shared that the Fifth Third Bank violated banking standards by allowing Crunwell to open an account in 1990 without proper documentation. Even the employees knew she worked for the city. All right. So before we talk about the requirements, so CLA admitted that they should have identified the fraud. All right. Now, what would be the easiest way to make sure that you know that they were not doing their job? What's like the biggest oversight in this whole thing? The thing that Dr. Barnes would be screaming about in bed at night when he thinks about this particular case. Segregation of duties. There's no segregation of duties, obvious. And so they had, but there was actually warning signs. So here's a picture from the trial. Okay. So what did they say that she was doing? She was creating fictitious invoices, and then the payment on those invoices she was basically putting into this trust or this bank account she created, phony bank account she created. So here's an example of a legitimate invoice from the Illinois Department of Transportation. Here's an example of a fictitious invoice. Now I'm going to zoom in just a little bit, okay? I know you don't consider yourself an expert in forensic investigation, but do you think that you could tell a difference between these two invoices? Like, it's very obvious. There's the letterhead up here, and there's no letterhead over here. It's not even in the same font. All right. Just little distinctions like that. It says, you got this from the Illinois Department of Transportation. Why does it say Illinois Department of Transportation? Oh, sometimes they leave that off. Oh, that's good enough for me, Rita. I trust you. Okay. Were there other things that probably should have been a signal? Yes. Okay. So let's go ahead and zoom in just a little bit. All right. So this is just kind of a replication of these the part of the invoice over here. Does anybody see something that's like a big signal that there's probably a problem with this invoice right here? Yeah, the word section is misspelled. How many government agencies do you think are just going to issue invoices that have gross misspelling errors? Like, this is where I just kind of like, I can't even approve of this fraud because that's sloppy. If you're going to commit a fraud, at least get the spelling right. That's what makes me mad when I get those schemes, like those scams that send me emails or they send me text messages. They send me misspelling errors. Like, I had one person to send me a your Y-O-U-R when they're supposed to be you-are. And I was just like, I'm not falling for this fraud just because your grammar is horrible. All right. But yeah, spelling error, silly little thing. Should this have been something that they identified? Yes. Okay. Just even if we're talking about sample testing where they didn't necessarily encounter and look at enough invoices like that, the fact that there were some obvious glaring issues and inconsistencies between the invoices are a problem. So control deficiencies for fraud for such a period of time. We know there's not segregation of duties. Now, the question I want to pose to you all, do we think that it's possible to implement effective segregation of duties in a very small infrastructure environment? Like, they have very minimal financial personnel. They don't have a lot of people who serve that role. She was comptroller. She was one of the only people. Like, she had I think somebody who worked for her. So they're basically two people. And how many responsibility areas are there? I'm holding 3 fingers up, so it's probably 3. Okay. Yeah. So mathematically speaking, it can't be the case. Now, what would you do in that situation? You're on the city council. You realize there's not appropriate segregation of duties here. What would be your solution to that problem? Hire more people. Let's just spend lots of money now. Obviously, hiring more people would be great. Okay. Let's say that we cannot feasibly do that we don't have the resources to do that. Would we want to be aware of that being a problem? So segregation of duties is a problem. That means that there can be a very there's a very we're vulnerable to fraud. Be a situation where that takes place. So you, as going to be on the city council, are you going to want to make sure that there's going to be some sort of oversight, at least periodic review of the work that's being done? Based on what we know from the case, how much review of Rita Crenwell's work do you think there was? None, little to none. In fact, it was only captured by the fact that she went on vacation and somebody took her responsibilities. And so, yeah, certainly problematic. So, why do you think the auditors didn't detect the fraud? They didn't care. I mean, legitimately, they didn't care. I think it was such a small scale scope engagement for them that they didn't want to devote resources to it. I think that they just kind of phoned it in, and yeah, they accepted any explanation. So keep in mind that if we're talking about a thorough audit before we do the detail, any explanation has to be corroborated that's going to be provided. I think that a lot of the explanations that were provided by Rita Crenwell to support her fraud, like, they probably found a lot of things that I don't understand this, explain it to me. She explained it and they said, oh, that makes sense. Moving on with my life. If you're an auditor and you're in that situation and you say, I found something suspicious, can you explain it to me? Then you hear the explanation. What is your immediate next step supposed to be? So go to the golf course and play a little bit of golf. Yeah, no, look into it. Yeah, investigate it. We want to find corroborating evidence to support those assumptions. That's going to be a term that we hear a lot moving forward in this course, is this idea of corroboration, because some evidence is not strong enough to stand alone, inquiry and observation being two of the paramount ones. And so I think that they relied a lot on inquiry and observation and didn't use legitimate evidence. All right, a lot of fun here. And so, yeah, there's a lot more to this case, by the way. If you ever get a chance to watch one of the documentaries or one of the documentaries that's about this, it's fascinating. It is absolutely fascinating. See, there's a lot more to fraud than just Enron. That's all I'm going to tell you. So let's go ahead and talk about the test of controls. So for this particular problem, you had to test some controls. So we have 5 control activities that all are related to the same series bundle of documents. And for the bundle of documents, let me get my test controls file. Here's an example of a voucher packet. And so you had to scroll through this voucher packet and you had to make sure everything was correct. Everything was matched what you expected it to be. Now, it's important to note that what you did is you looked at what the controls were, and then it talks a little bit about whether we can accept or reject. But in order to be able to determine that, you had to walk through the control activities here. Now, I do not like the design of this. I hate the way that they've got this set up vertically, and this is set up horizontally. That being said, it's actually a pretty interesting series to show how test of controls work. So the question is going to be pretty straightforward, and this is going to be relevant next week, by the way. The question is pretty straightforward. When we look at a control, we're asking a very basic yes/no question. Is the control effective? All right. Did the control work in the scenario? And that has to do with whether or not there's evidence of that control taking place. Now, example of this, document package includes documents appropriate to the transaction. So how do we phrase that in a form of a yes/no question? Okay. Does the document package contain all the necessary documents? Does it contain the purchase request? Does it take the purchase order? Does it contain the receiving report? Does it contain the invoice? If the answer to that is yes, then you say the control worked in the scenario. If the answer is no, then you say the control didn't. And by the way, when I say control worked, we're saying the control was effective versus deviation. Now, you may have noticed this, hopefully you noticed that we're only testing 4 items, which would be great if that's the way it worked in the real world, but apparently 71 of the other tests were conducted by somebody else, which basically got rid of a lot of our testing. And for the other 71 tests, we got effectiveness. But we're going to talk about these 4 right here and make sure that we understand what's going on. And there's going to be a little bit of learning that's going to take place. So let's just go ahead and go through each of these documents, because I had you go through the documents. I want you to tell whether or not the control was effective here. So just as a review for the controls, first one is all the documents are present. Second one is the purchase request is signed by a supervisor. Third one is purchase order signed by an authorized purchasing agent. Fourth is the quantities agree with the receiving report purchase order and the invoice is mathematically correct. And the document, fifth one is the document voucher package has been stamped paid. Now, interestingly enough, you will notice that they have authorization listed up here. Again, I told you to ignore the fact that it's not a real assertion. If we were to talk about what these actually test, what the transactions test here, these are more test of existence occurrence, additional redundant test of existence occurrence. But we're going to assume for the time being that authorization is the appropriate assertion here, even though, again, I think that this is just actually looking at a lot of existence occurrence test, which is probably fine for this particular series of transactions. You may make some arguments that these are also completeness tested. It really depends on what it is that we're concerned about. All right, let's go ahead and do some testing. So first voucher package. So control number 1, all documents are present. Was that effective or was there a deviation? It's effective, yeah. Control number 2, request is signed. That was effective. Control number 3, the purchase order is signed. Effective. Yeah. What about number 4? Everything's mathematically computing correctly. That was effective. And then number 5, I'm already forgotten what number 5 is. Number 5 is all documents in the voucher package have been stamp paid. Were they all stamp paid? Yeah. Well, this is easy. We just need all our voucher packages to do the exact same thing, and then we got our testing control done. All right, let's just go ahead and move on. All right, starting number 1, are all the documents present in the second voucher package? Yep. What about control number 2, purchase request signed? Uh-oh, I see a head shake. That means there's a deviation? Well, okay. All right. What about number 3? Was the purchase order signed? Oh, somebody was really sloppy with this particular purchase order. We just had to burn this purchase order, not allow it. Okay. What about number 4? Was everything compute correctly? Yep. And then number 5, was everything stamp paid? Yes. All right. Moving on to the third item, the third voucher package. Can we say the control number one's effective? Yeah, everything's present. Number two, purchase request. Uh-oh, we have a deviation. There's two deviations. We got a little bit of a problem, but we'll talk about that in a second. What about three? Was the purchase order signed? Yes. Number four, everything computed out correctly. And number five, was everything stamp paid? All right. Now let's talk really quickly about this voucher package. Now, did anybody have a problem with the documents that were in the final voucher package? Let's take a look. What's up, Dorn?
Wasn't it like a request for something?
Yeah, that's an interesting point. So let's look at that document. If we go through and go to the end, go to the invoice, what is this supposed to be? It's supposed to be the vendor invoice. Does that say vendor invoice right up there? It says invoice request. Is this a deviation or not? I want to talk through this as a class, okay? Is this a deviation? It's not a vendor invoice, but the question is, should we consider this as a deviation as auditors? Who's responsible for issuing that invoice? The vendor, the client's vendor, okay? Does the client have any hearsay or any say over whether the vendor says that sends that invoice in? No, they can't control whether the vendor sends that invoice. So it looks like in this situation that we don't have the vendor invoice, which would strictly speaking would be a violation. If you said that it was, that's fine, okay? It's not going to change anything. But as an auditor, would I want to be a little bit more investigating and say, why is there an invoice request here instead of a vendor invoice? So they probably, well, we requested an invoice from the vendor. They have not sent it to us. So this is the best we can do for the time being. Does that sound like a reasonable explanation? Yeah, assuming everything else matches up, I think that's probably a pretty reasonable request. So if you said deviation, there's some argument for that. If you said that it's effective, there's argument for that. We're just going to go ahead and assume that the client is operating on good faith, and we're going to say effective right here. Now, if you answer deviation here, to be honest, it doesn't matter because that's only a single deviation. There's arguments for both, but that leads an interesting question about whether or not the client is operating in good faith. And then can we say everything else is effective? I know I'm shortcutting here. So your answer should look something like this. Now, if you put all deviations down, there's no hope. There's no hope. Yeah. So hopefully you didn't do that. Hopefully you came up with these answers right here. So now when we fill all this out, you will notice that we're accepting all but one control. We're rejecting this control about the purpose request being signed by a supervisor. So then you had to describe any necessary revisions to the audit plan. Now, what is this telling us about the control? We've got a control that's ineffective. Is that going to affect our control risk? And now, before you answer anything, don't shake or nod your head. Well, I want to talk about this. Okay, I want to talk about this. So we have 11 minutes, so we got plenty of time to chat. We're not going to use 11 minutes. You're going to guys going to get an early Friday. All right, but I do want to talk about this. I want to speak about this because this is an important consideration. What are we ultimately trying to accomplish when we assess control risk in this regard? That the controls as a whole are effective. All right. If I say control risk is something below high, if I say control risk is low or control risk is moderate, am I assessing every single control has to be operating perfectly? Or am I saying that the controls as a whole prevent misstatements from occurring, prevent bad transactions from flowing through the system? I think I'm saying the former rather than the latter. Okay. I'm saying the latter instead of the former. I'm saying that controls as a whole are effective. Now, is it possible for one control to fail and yet the control still be effective? Yeah, particularly if we're talking about controls that address specific risk areas. How do we characterize risk as auditors? What are those two words? How do we characterize risk as auditors? What are those two words? Management assertions, okay? So here's the interesting question. This control failed the authorization assertion, the authorization assertion, okay? Do we have any other controls that address the authorization assertion? Yeah, was that control effective? So can I say that we have controls that are effective in addressing authorization? Yes. We have at least one control in that area. And to be honest, this control is not that far off. There was two failures in 75 transactions, which by statistical speaking, which we're going to talk about next week, statistically speaking, is probably likely too high to accept. But given that we have another control in this area that we think is going to be effective, it'd be reasonable for me to say no deviations to the audit plan. Control risk is as we assessed, even though one control failed, there are controls in this area that make sure that the transactions themselves are consistent. Now, what do we do about reporting on this? Would we still say that we could still say the controls are effective, but would we want to let management know that this particular control failed? Yes, this would be one of those things we report to management. We tell them this was a deviation. It was not a significant deviation because you have other controls in this area, but you might want to make sure that whoever is responsible for this particular control does a better job and more thorough job in the future. Yes.
What assertion is that?
It's really hard to say. I think occurrence is the easiest one, but I think that you could also make an argument for completeness. It really depends on, because, the reason I don't like occurrence here, I don't like recurrence actually for these two assertions here. I think these assertions are somewhat arbitrary. We're talking about accounts payable. We're talking about the purchasing process. And as I alluded to, if we're talking about something that's very liability and expense focused, our primary concern is going to be about completeness. The fact that we have no completeness controls up here really bothers me. So I'd assume that this is going to be more focused on completeness right here. That being said, we'll talk about the specific controls in that area when we get to the purchasing process. This is more of just making sure you understand that the alignment of controls kind of dictates whether or not we think controls as a whole are effective.
So since this is like them, the supervisor signing the purchase order and everything, is that transaction events, not account balances?
So yeah, all tested controls are going to relate to transactions and events. Yeah, so keep in mind that controls are set up to, okay, I want to back up real quick because that's an excellent question. And it's going to contradict something I will say next week if I leave it at just this, okay? The majority, and if virtually every situation we're going to talk about with respect to controls will cover transactions and events, all right? And you can kind of see that we have source documents that relates to individual transactions like invoices, purchase orders, those all relate to individual transactions. I will say 99.9% of the situations that you encounter talking about controls, those are going to be controls related transactions and events. Next week, I'm going to talk about entity level controls, and a lot of our entity level controls will relate to account balance representation before. So it is possible to have controls over account balances, but they represent a minute fraction of all controls in place in our organization. But yeah, good question. Excellent question. All right. Well, with that, I think we've had enough of this week. So let's call it good. Chapter 7 starts on Monday. I'll see you all then. Have a good weekend.